Good day, everyone. You are welcome to this week's Business and Investment Tips Program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the attention is on the federal government's 2022 budget proposal. President Buhari presented the 2022 budget last Thursday, which is about 3 months to the end of the year. This will help uphold the January to December budget cycle for the third consecutive year. The 2022 budget was tagged Budget of Economic Growth and Sustainability. A budget is a financial plan that outlines the estimated government expenditure and expected government receipts or revenues for a fiscal year. Nigeria has consistently run a deficit budget, a situation where government expenditure exceeds government revenue. The budget figures were based on some assumptions, which include oil price at $57 per barrel, oil production at 1.88 million barrels per day, exchange rates at 410 naira 15 kobo to a dollar, projected inflation rate at 13%, and projected growth rate at 4.2%. The assumptions are conservative, hence there is room for positive surprises. In particular, the oil price assumption is 42.5% higher than in 2020, but still conservative given that it's 28.8% below the recent peak of $80 per barrel. The proposed 2022 budget expenditure was projected at 16.4 trillion naira, a 12.5% increase over 2021 approved and supplementary budgets of 14.6 trillion naira. The expected 2022 revenue was estimated at 10.1 trillion naira, 25% higher than the approved and supplementary budget of 8.1 trillion naira in 2021. The recurrent expenditure was projected at about 70% or 11.5 trillion naira of the total budget. Recurrent expenditure relates to all expenses other than capital spending on physical goods with benefits exceeding a year, including goods and services, personnel costs, interest payments, subsidies, and transfers. The debt service, which is the amount set aside to service the existing loans and pay loans due, was projected at 3.6 trillion naira, or 22% of the total budget. Personnel costs, which includes wages, salaries, pension contributions, and other worker-related expenses, was estimated at 4.1 trillion naira, or 25% of the total budget. Lastly, capital expenditure, which relates to spending on capital projects like construction of roads, building hospitals and schools, stood at 5.4 trillion naira, or 33% of the total budget. The revenue is projected based on expected income from the sale of crude oil, income from taxes, duties, and income from government-owned enterprises. The oil revenue component was projected at 3.1 trillion naira, or 34.9%, while non-oil revenue was estimated at 2.1 trillion naira, with the balance of 4.8 trillion naira from other revenue sources, including the operating surplus of ministries, departments, and agencies, and government-owned enterprises. These revenue projections are highly optimistic. Given the various deductions from oil revenue, including subsidy, there is likely to be an underperformance. Similarly, the revenue from other sources are not grounded in actual economic transactions that can reasonably be estimated. The budget deficit, which is the difference between the projected expenditure and revenue, is expected at 6.3 trillion naira for 2022. The fiscal deficit is expected to be much higher, given the highly optimistic revenue projections, implying that the federal government's borrowing is likely to be more than expected. Accordingly, the share of revenues going to debt service and personnel costs will rise, while capital expenditure would suffer. The takeaways: 1. The budget assumptions are overly optimistic in some areas, given the current state of the domestic and global economy. Specifically, the average exchange rate and inflation rate are unrealistic given recent trends. In any case, a worse than expected outcome is likely to support revenues. 2. Despite the revenue challenges, government expenditure has continued to rise on a year-on-year basis, specifically recurrent expenditure, emphasizing the high and unsustainable cost of governance. 3. Due to the continuous expansion in domestic and foreign debts, debt servicing rose by 16% year-on-year and accounts for 22% of projected expenditure in 2022. This raises debt sustainability concerns as most of these debts are channeled to non-productive sectors, that is, recurrent expenditure. 4. Personnel costs account for 25% or 4.1 trillion naira of the total budget and about 40% of projected revenue, implying that the federal government spends too much of its resources on the small share of federal government employees relative to the total population. 5. The federal government has tried to sustain the approximately 30% allocation to capital expenditure, which is commendable. For effectiveness, the fund should be structured primarily as counterparty funding for private sector-driven projects. 6. While there has been consistent growth in actual performance of revenue from government-owned enterprises from 216 billion naira in 2017 to 691 billion naira in 2021, the continued high projection from other sources, including government-owned enterprises, will expand the actual deficit and increase borrowings. 7. Based on the optimistic revenue projection, the actual budget deficit will significantly be higher than 6.3 trillion naira, which means projected new borrowings of 5 trillion naira with a split of 2.5 trillion naira each for both domestic and international borrowings may be exceeded. We expect continued support in the form of ways and means, that is, loan from the CBN, to bridge this gap. Higher domestic borrowings will lead to higher fixed income rates in 2022. 8. Worthy of note is the education and health sector's allocation of 1.2 trillion naira or 7.9% and 820 billion naira or 5% of the total budget. These are positive for these sectors. 9. The defense and security sector accounts for 15% or 2.4 trillion naira of the budget, which may seem more of throwing money at the problem than solving the underlying economic and social challenges inducing it. 10. Social development and poverty reduction programs account for 5.3% or 863 billion naira of the budget, which shows FGN's dedication to its cash transfer program. 11. The federal government has indicated its intention to eliminate petroleum and electricity subsidies in 2022. This may be a tough decision given it's the year preceding the election year. We expect a prompt passage of the budget before the end of the year and onward assent by the president. Please note that this budget excludes the budget for the states. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 07082463747. Stay blessed.